Hey, what's going on, my friends? It's your man, Adam Ace Spencer, here with another M1 Finance Growth Portfolio Update. If you're new to the channel, we contribute $25 every week to this growth portfolio. And regardless if the market's doing bad, if it's doing well, we don't really care. We are continuing to invest every single week. That is our dollar cost strategy, hoping that we will end up doing pretty well in a year, 2 years, 5 years, 3 years, 10 years, just at some point down the road, right? We don't need this money now. So despite any potential, fear that you might have, you need to hold strong, or at least consider holding strong, because as you read, headlines like the stock market down as fear of recession hits Wall Street, people start to panic even more, especially if you are a new investor. Now, I'm not going to read this whole article, but I just want to read this opening part here. It says concerns over the state of the U.S. economy are growing as fears of a recession continue to take a toll on Wall Street. The stock market ended the week in the red, with the Dow Jones falling nearly 350 points. The S&P was down roughly 70 points, and the tech-heavy Nasdaq dropped more than 300 points. Things obviously still aren't as hot as they could be. And for that reason, I know a lot of new investors are panicking, they're selling, they're jumping ship, but we aren't doing that over here with our growth portfolio. Instead, we are sticking firm to our plan and continuing to invest every week. So jumping right into it, you guys can see over the past day, our growth portfolio is down 4.34%. Over the past week, we're down 2.06%. Over the past month, we're down 10.59%. Over the past quarter, we're down 30.23%. And over the past year, which is the same as all time, our growth portfolio is down 56.73%. Ooh, brutal. So brutal. That gives us a current value of $953.99. Now, as you guys can see, our market gain is technically $674.89, but we have received 4 cents in earned dividends, which you guys know if you've seen our dividend portfolio updates. You know we love our dividends, but that's not for this portfolio. So our market gain is pretty high, and we don't have any dividends to take, to help reduce our market gain. So our gain for our portfolio is negative $674.85. So if we were, looking at everything we've contributed over here and whatnot, it would be $1,628.88. Again, we're down 56.73%. Ooh, not pretty at all, but we also aren't panicking. We're not worrying, because this is a growth portfolio, and majority of the stocks that we have in this portfolio haven't even really been around for 10, 15, 20 years, and they still have a long ways to go till they can really prove that they are not just a growth play that you should consider investing in, but that they are someone who will be around for years to come. Now, when I look at this portfolio and I look at the stocks that I have in here and I think about the market, I'm not really worried, because I believe all of these companies will be in a much better position in 3 years, in 2 years, in 5 years, and 10 years from now. And remember, it's a growth portfolio, so it's all about the long term. It's a marathon, not a sprint. We don't really care much about the instant gratification with this portfolio. So regardless of, again, how the market is doing, I'm going to continue to invest $25 every week to this portfolio and accumulate as many shares as possible of these stocks. So jumping right into it, you can see at the top of our list who has performed the best compared to the worst. You got ChargePoint, who is up 7.78%. Then we have Nvidia Nvidia is down 20.65%. SEMrush down 29.37%. CleanSpark down 38.77%. Palantir Technologies down 60.20%. DraftKings down 61.64%. Bakkt Holdings down 61.69%. And at the bottom of our list is Coinbase, who is down 84.98%. Now, I do want to draw your attention to a stock like Coinbase, for example, who is down pretty badly right now, right? You can see the gains that we have is negative $151.23, and the value currently sits at $97.95. So we are down way more than how much we have behind Coinbase at this time. And yet I am still not panicking. I'm not worried, mainly because I know the cryptocurrency market is getting hammered just like growth stocks, just like regular stocks, value-based companies. Even our dividend portfolio is, basically even or down, a few percent compared to some of these other plays that you see over here. So everything is getting hit. But when you look at, again, growth plays, but then also specifically cryptocurrency type of stocks in that whole industry, you see a lot of these plays being hit the worst. So I'm not panicking. I do still believe in, where Bitcoin will be in a year from now, 5 years, 10, 20 years from now. And I think Coinbase is trying to solidify themselves as one of the leaders in the industry. And, they're going to have more challengers over the years to come. They're going to continue to face challenges with trying to stay at the top, and a lot more competition is going to kick in. But if they can end up, doing well and staying as one of the premier kind of crypto exchange platforms and whatnot, this could be really good for us because, again, we have this opportunity to continue to buy at these really cheap prices and accumulate as many shares as possible. And it's similar to like Nvidia right now, where, let's be honest, Nvidia is going to be huge, and no one knows for sure, but it's very likely that Nvidia will be pretty big in another 5-10 years from now. So I look at it the same difference, us being in a position now where we can continue to accumulate as many shares as possible while these stocks are so cheap is not a bad thing. Yes, the overall portfolio is not doing so well, but when I look at how the portfolio is doing, or at least where I believe it's going to be, and having that opportunity again to accumulate more and more shares at these really cheap prices, man, I'm actually loving it. Like I said, yeah, no one wants to see your portfolio return down 56%. That's brutal. Not fun. But we don't need this money now. If this said it was up 100%, I wouldn't be pulling the money out. You can go back and look at some of my first videos when Bakkt Holdings ripped it, and I called it. I said, this is going to drop from here. We could have tried to do some swing trading. I could have sold it when it was high before it dropped back down, but I just don't want to spend all that extra time having to watch the stocks, trying to set these stop losses and whatnot, which I don't think you could even do with M1 Finance anyway. But my point is, regardless of how good or bad this portfolio has been doing, my plan hasn't changed. I'm continuing to invest $25, and we're going to just see this baby grow over the years. So if you guys are motivated or encouraged, and I know you might be looking at your portfolio like, yeah, I'm down pretty badly too, don't be discouraged. Again, if you believe in the stocks you are holding, continue to accumulate more shares while the prices are cheap, because they're not going to stay down like this forever. Of course, this isn't legal or financial advice, just some YouTuber sharing his portfolio with you guys. So, my friends, I am going to wrap it up there. But if you guys found this video helpful, motivational, or encouraging, definitely smash that thumbs up button and subscribe to the channel. Hit that notification bell so you can stay up to date on all of our latest and upcoming video content. But all right, my friends, enough from me. You already know what it is. I gotta keep it moving, but I'll see you in the next video. Peace.